In 2024, AMD bought back 5.9 million shares of its stock. To me, that indicates that AMD's management team feels that the stock is undervalued. And I've agreed with that for the last year, 2 years now. I've had AMD stock rated as one of my top stocks to buy. So AMD's management team has bought the dip, so to speak. When the company's stock price has felt undervalued, they've spent billions of dollars buying back their shares. So in this video, I'm going to elaborate on that and answer the question, if AMD's buying back their shares, should we be buying their shares? So let's take a look.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So during the most recent quarter, the company generated $1.3 billion in cash flow from operations and $1.1 billion in free cash flow. Since the company doesn't do manufacturing of its semiconductors, it outsources that. It doesn't really need that much cash to invest in capital expenditures, right? So that free cash flow that the company generates is available for management to use for things like share buybacks. And in 2024, they repurchased 5.9 million shares, and on top of that, returned $862 million to shareholders. They still have $4.7 billion remaining in their share repurchase authorization. So I wouldn't be surprised if AMD stock price remains low, if they go out and repurchase billions of dollars of their shares here in 2025. Just to remind everyone, AMD stock on a forward price to earnings basis is trading at a forward PE of 17, the lowest it's been going back a year. The lowest it's been. And given the company's growth prospects, given its expectations for free cash flow growth that's transparent to the market, it feels like this is a huge bargain. And AMD's management certainly feels that way. They're going out and buying billions of dollars worth of their shares. Now, I also want to make a point here. A lot of management teams go out and say that they feel their shares are undervalued. And I hate to pick on Tesla again, but I will do so again because it illustrates my point. You hear Tesla's management team going out and talking about how they feel that Tesla stock could be the most valuable company in the world in 3 years, in 5 years, and they could be worth trillions and several trillions of dollars, and how they have these trillion, several trillion dollar opportunities, right? They're going out and speaking that to whoever will listen. But are they going out and buying back their stock? Are they going out and using their money? Tesla has over $30 billion on the balance sheet. Are they using any of that to buy back stock? Not really, right? They're actually, the management team, you've seen Elon Musk sell billions of dollars of shares of Tesla stock in recent years, doing the opposite, right? Why would you be selling so much if you think the stock is going to be worth trillions of dollars? You'd rather own Twitter than own shares of Tesla, which you think is going to be worth trillions of dollars, right? That's the big difference there. AMD's management has said they feel their shares are undervalued, and they've gone out and purchased it, and they've prepared themselves to purchase billions more in their stock. So they're not going out publicizing every day and talking about how they feel their shares are worth trillions of dollars. They're just quietly going out and buying back billions of dollars in shares of their stock. Apple is doing a similar thing here. They're not going out publicizing, talking about and boasting about how valuable they think their shares are. They're saying, hey, look, if you don't think our shares are valuable, you go ahead and feel that way. We're just going to go out there and spend billions of dollars buying back our shares. You can go ahead and underestimate us all you want. We'll just go out and keep buying our shares. So that's a big difference when a management team, of course, a CEO and CFO of a management team of a company, they're incredibly biased to try and highlight the positives of their business, right? Of course, every CEO does that. They're, one of their roles is to go out and promote their shares to investors. But there's a difference between just going out and promoting and talking about how you think your shares are undervalued and going out and spending billions of dollars or hundreds of millions of dollars buying those shares. And then you have management teams and managers that try to say that they feel their shares are undervalued, but at the same time, they're selling their shares and trading it for something else. So that's something interesting with AMD. Their forward PE is incredibly low. And then I recently updated my discounted cash flow valuation model for AMD stock on February 6th after the company announced earnings and after Wall Street analysts updated their free cash flow forecasts for AMD over the next several years. And my intrinsic value per share increased for AMD stock up to $246. Previously, the intrinsic value per share I had for AMD was around $180. So the intrinsic value has increased from my previous discounted cash flow for AMD, which I did a couple of months ago. I tend to update these about every 3 to 6 months because that's when the free cash flow forecasts get updated as the company announces quarterly earnings results and I get more information. I update these models with the new information that comes in, and the new information that came in for AMD was positive for its long-term prospects. So for the first quarter, AMD is forecasting revenue between 7.1 billion plus or minus 300 million, which would be a 30% growth from the same quarter last year. And this is going to be driven by strong growth in their data center and client business. The data center business is the one that I'm most excited about for AMD, Nvidia, and others. This segment is forecast to grow significantly over these next several years, perhaps even over these next maybe decade or more, as we get more and more use cases for artificial intelligence, and the return on investment continues to be so strong that enterprises like Alphabet and Microsoft and Amazon and Meta platforms, etc., keep increasing their budgets for these data centers optimized for AI. They just keep increasing these budgets. They did so again here in 2025. And so it's very strong for AMD. So to answer the question I posed in the headline, AMD is buying back their shares. Should investors buy their shares? Well, I have the stock rated as a buy. I certainly think so. In fact, I have AMD stock rated as one of my top 9 stocks to buy right now. I follow over 120, 150 companies. And out of all of those companies that I follow, I think AMD is in the top 9 right now when looking at the risk versus reward at current prices and current valuations. Of course, there are significant risks, but I think at the current prices, the reward justifies the risk for AMD stock investors in the long term. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.